الله الرحمن الرحيم وصلاة وسلام وبركاته على سيدنا محمد أفضل الخلائق وسيد المرسلين صلى الله عليه وسلم. الحضور الكريم سلام الله عليكم ورحمته وبركاته. دعوني أسأل في البداية as we have the headphones for translation, or we are going to conduct talk in English. Okay. Well, it's my privilege and honor to welcome you all here in this special evening where we host. I don't know which feature I should start with. I would say with an old friend, where our friendship dates back to a few decades. I wouldn't specify how many decades. We are getting old, so so really a few decades ago, we're at the very early beginning of the Islamic economics and Islamic finance movement, which means definitely more than 30 years ago, and why stall at that. Professor Nienhuis, as a matter of fact, is, as I said, one of the early scholars who worked in this field, who contributed substantially to both the theoretical and the empirical framework. More recently, dedicated more time to regulatory framework and the framework of standardization and the pitfalls that faced many of the Islamic banks in practice. This did not mean that he left away or gave up his distinguished career as a professor of economics and the president of one of the most distinguished and oldest Protestant universities in Germany, Marburg University. And in the meantime, he was I wouldn't say in touch, because he was in the field with the Islamic finance movement all the way through. It's not his first visit to Qatar Faculty of Islamic Studies. He had been involved with us again all the way through from the very beginning. And we tried our best to convince him to stay with us, but we were not successful. We're still hoping. But anyway, I mean, he never was away from us. Tonight we have chosen a topic which had been, it's a question that had been asked so frequently and never is always asked. I mean, sometimes when I talk, I'm asked from some friends or people who are attending, do I have to be a Muslim to deal with an Islamic bank? It looks an obvious question, you normally answer. So, on the other extreme, recently I have been visited here by a very distinguished representatives from an international banking association. And the question is, do you sincerely believe, forget about your position, Dean of Qatar Faculty of Islamic Studies, Professor of Finance of Islamic, we ask you as a finance professor, central banker, practitioner, do you think really Islamic finance offers an opportunity for the banking system or for the world that can do something to rectify some of the things? So the question is very in the heart of the debate. Tonight we are eager to listen to Professor Nienhuis' presentation, and we have, I think, one of the beauties of the not so large number that we can have enough time to discuss at ease. I will take any more time because of in-house for this course.
Yeah, thank you very much for this introduction, also for the invitation. It's my great pleasure to be here again. Yeah, since 30 years, I think Islamic finance has come a long way. And I'm making presentations in both worlds, if you like. On the one hand in the Muslim world, on the other hand also in the Western world. And this question, is Islamic finance also for non-Muslims, is a question that many people in our part of the world, that means Europe, are asking. And the answer is, of course, no, it is for everybody. But I'm looking at this question from a slightly different angle, because we have in two parts of the world a debate whether it wouldn't be a good idea as Islamic banks to target the non-Muslim communities, because there is something that Islamic finance can offer to the non-Muslims. And in particular, this debate is very active on the one hand in Malaysia. You must not forget that the ethnic Muslims, the Malays, are only 60% of the population, 40% are non-Muslims in this country, so it is a significant portion of the, in particular, more wealthy potential clients of Islamic banks. And on the other hand, it is a debate going on in Europe, because in Europe we only have Muslim minorities, maybe in Germany 4 to 5 million Muslims, but 80 million people. So if you want to grow as a bank, why not address, besides the Muslim communities, also the non-Muslim communities? And is there something in Islamic finance that could make it particularly attractive to non-Muslims? To give you the answer right at the beginning, yes, but there are some attractive features in the concept, but the way Islamic finance is delivered in many parts of the world raises some question marks. And I would give you some ideas why Islamic finance could be of interest, but what has to be done in order to attract more attention and really to attract more customers in the non-Muslim communities. So now, I promised I can handle it, but obviously I can't. I pointed in the wrong direction. Okay, so Islamic finance for non-Muslims, yes, of course, non-Muslims are not rejected, but are non-Muslims attracted? As I mentioned, non-Muslims are a huge potential market, and Islamic finance very often is presented in a way, especially after the financial crisis, that people think Islamic finance might be better finance than the conventional finance. So, with this background, what could attract non-Muslims to Islamic finance? And I will go through some of the potential attractions and give you my ideas back. The first thing, Sharia compliance. Well, which is not here, the point that is not on my slides, Sharia as such does not have a very good press in the Western world. So if you call it Sharia compliant finance, it may even be a negative signal to many people. And it is probably because of this reason why all the big German banks are active in Islamic finance, but none of them is doing it in Frankfurt or in Germany. They all do it through either Dubai or through their London branches. They offer private wealth management, they offer project financing, they offer issuance of sukuk, but they hardly offer anything on the retail segment, because the experiences have been that they might frighten their regular customers. But during the crisis there was a closer look at Islamic finance, and it was usually presented in a way that Sharia, here related to finance, would have prevented these speculative trading bubbles and the subprime crisis that we have seen. So Islamic finance should tie finance to the real economy. It should provide capital to entrepreneurial projects. It should abstain from speculative trading in financial papers. It should not invest in questionable businesses, gambling, alcohol, pornography. Well, actually we don't have so much problems with alcohol, but the other things are also relevant, weapons of mass destruction. So maybe not Sharia as such, but the implications of Sharia once they are explained to the non-Muslims, might look quite attractive. However, if I put it this way to a Western audience, very often I get the question, well, is that much more than what we know as prudent or old-fashioned relationship banking? Is it really something so different from what banking should look like, or has been in the past, even in our parts of the world? Is that a new invention? And I can hardly say, no, it is something completely new. On the contrary, I usually draw the attention to the fact that the claim is often Islamic finance has proven to be more resilient than conventional finance during the last crisis. This is correct if you compare Islamic finance with the top 10 or top 20 conventional banks. All of them were active in speculative global markets, exposed to subprime products, toxic assets, etc. But in Germany, for many people, it is like a shock to realize that we have in Germany approximately 1,500 independent banks, 1,500, not 15. Most of them are small banks, savings banks, cooperative banks with a regional mandate, with a regional deposit base, but also with a regional clientele for the financing business. And in that sense, these banks, they knew their client, they did not invest in toxic assets, they did not gamble in the capital markets. And so these banks survived as well as many of the Islamic banks because they had a similar business philosophy, and that was relationship banking and old-fashioned prudent banking. So we have examples that it can function, and that Sharia has some beneficial implications if that would be followed, but that doesn't mean that we have to shift to Sharia banking in order to realize these benefits. We should remind our bankers of what we are expecting from them. And right now we see a movement in many countries that back to basics and limits to excessive bony, rethinking the incentives in the remuneration of management. All this is going on. This is an ongoing process. So we are close in this regard, but this by itself is not a very convincing argument. What is sometimes seen as a hindrance is the terminology. If we talk about ijara, that is the easiest thing if I can translate it into leasing. So that is well understood. It becomes difficult if I tell that leasing, although it is financial lease, has to be operative lease in order to be Sharia compliant. And that is already for the specialists. But if I'm talking about murabaha financing for, let's say, durable consumer goods, or parallel murabaha, parallel salam, parallel istisna, commodity murabaha, tabarruk, it becomes quite complicated, and using all this Arabic terminology doesn't make it easier. I'm, by the way, also not quite sure whether it is easier for non-Arab Muslims in the Muslim world. So there is even amongst some Islamic banks the idea that why not say it in plain English. Okay, the other thing is that we very often have complicated contracts. If I explain that if you want to finance your home, not by a loan and a mortgage, but by a diminishing musharaka, it becomes quite complicated. What does it mean? It is a combination of a sales contract, piece-by-piece transfer of property rights. It is payments, not interest, but for the usufruct of having this house for 20 years before it is finally owned completely by you. So these are quite complicated concepts, and they are not understood easily. And especially if people ask for the end result. So in the end, it's my house, isn't it? Yes. So why go all these complicated steps? Now, if you insist on a formal legal Sharia compliance, probably that is the way that you have to go. But if you just want the financing and don't care very much about the Sharia compliance because you are not a Muslim, you probably will not develop a strong preference for these techniques. In particular not, if you realize that sometimes there are legal issues which result, for example, in a country such as France or Germany from the civil law system. In the civil law system, we have so-called nominate contracts, and that's the same as we have in Islamic law. The murabaha is a contract that has a specific name and a specific legal meaning. Now, a loan in our legal system is a loan and it has a specific legal meaning. So to use a sales contract for financing to replace a loan by a sales contract does not go well with our nominate contracts, because sales contracts have different obligations for the parties involved. In a common law system, you just look at the intentions of the parties and you can reconcile it. But in a civil law system, where we have codified meanings of these contracts, you have a conflict. And that means you may be able to settle these conflicts, but there is a legal uncertainty in these countries. And this legal uncertainty, well, if you have to go in a Sharia-compliant manner, again, you hardly can evade it. But if you don't have, why go on this sometimes uncharted legal territory? Now, let's look at the pricing of Islamic products. If it is more complicated, but maybe it's cheaper. But unfortunately, it does not look to be much cheaper. In particular, most of the instruments that are used by Islamic finance now are sales contracts, murabaha contracts. That means the bank is providing real assets. The bank is purchasing these assets on your behalf and reselling it to you, and it's charging a markup. And the problem is that this markup is more or less determined not by the commodities market, not by the real economy, but traditionally it was LIBOR as a benchmark. That means the London Interbank Offered Rate and interest rate, which, as we know since quite a while, has been manipulated. And so in that sense, it's not really a systemic alternative, and it doesn't have a systemic advantage. It is more or less the same way how you price your products. It's the same benchmark. And so probably you cannot expect consistently and permanently a price advantage of Islamic products. On the contrary, it may be that the third point cost to be a Muslim, the famous CBN. It may be that you have to pay more for the same financial services because the production costs are simply higher. Sharia compliance is not for free. So you have to apply, you have to consult Sharia scholars. You have to set up a Sharia compliance system within your bank. So in that respect, it may be that maybe the costs are higher than just producing loans. And unfortunately, there is an alternative in the making, an alternative proposed, I think, in particular by Thomson Reuters, namely a Sharia benchmark which should reflect the scarcity of capital in the real economy. But the way this benchmark for the time being is calculated, it is more or less based on the murabaha markups. And as long as most banks benchmark their markups against LIBOR, we haven't achieved much. It's more or less the same thing. Only if really we come up with, so to say, the real profitability of projects, the internal rate of return of projects, and that could be aggregated, we could come up with a new benchmark which may be better and cheaper than the conventional one, but it also may be more expensive. We simply don't know for the time being. Now, in the deposit business, if you have money and you put the money in a bank account, the IAH is the investment account holder, so the depositor of an Islamic bank. He gets a return which is in most banks very much in line with the interest rate for savings or term deposits. So it's not more, it's also not less, it is more or less in line. depending a little bit on the liquidity situation of a particular bank, whether you want to mobilize more deposits or less. But it's clearly the conventional benchmark, the conventional rate of interest is the benchmark. This, by the way, is a problem because actually investment account holders put their money into a bank account based on a contract that is very different from a deposit contract. If you are a depositor in a conventional bank, you can claim 100% of your money back whenever you want to get the money back. And if you have earned interest, also the interest. So your money is not exposed to any risk. But in most banks, for the time being, still, investment accounts are based on mudaraba contracts, and that means profit and loss sharing contracts. So your money is invested by the bank, and you are sharing the returns of your investment with the bank. And if there was a poor investment, you might even expose your deposits in inverted commas to a risk of not getting back 100% of the money that you have paid into this account. So usually we have assumed that there should be a risk premium if you put your money at the risk compared to a risk-free alternative. It should be paid for that. There should be a payment for that risk, but actually it doesn't work like this. So you usually don't get more. And in a sense, I would say there is a kind of a deposit illusion. You think as an investment account holder that your money is like a deposit in a conventional bank, but actually it is not. There are certain techniques of, for example, smoothing the payouts, keeping the returns in line with the conventional financial system. Deposit insurance schemes are also now on the agenda. So people think they have a deposit, but actually they don't have. Fortunately, so far, I think there's only one case where really Islamic banks had a problem of repaying the full amount of the investment accounts. But again, why go for all these difficulties if you are not a Muslim and the alternative is a simple deposit? There you have a clear legal claim, and that's it. You get the same return and you have no risk. What may be attractive is the idea of takaful, which is the Islamic alternative to insurance. The takaful model, as it could be practiced, has a very interesting feature that may explain why in Malaysia, for example, also quite a large number of non-Muslims were attracted by this takaful model. Instead of buying an insurance from a company, from an insurance company, you pay your money into a pool. Donated in a sense, it's called tabaru, a conditional donation, and out of this pool all the claims are compensated. So if you have a car insurance or an equivalent to a car insurance, everybody is paying a certain amount equivalent to the insurance premium into this pool. But if at the end of the year there were not so many claims, you drove more carefully in the past, then you can get back money out of this pool because you own that pool. And that is different conceptually from an insurance company where you have border police, and whatever happens, the money goes to the company, it stays with the company, and you can only claim compensation if there is a damage. So I think this has a lot of elements of a mutual insurance. And because of that, and in many countries mutual insurances were not introduced, were unknown. This was an innovation that attracted also non-Muslims. Because of this refunding, so to say, at the end of non-used takaful contributions. The enthusiasm faded away once people realized that on the balance, they are just getting back what has been overcharged at the beginning. So I mean, if I expect a payout of 100 and I ask everybody to contribute so that the pool is 110 in the beginning, I can pay back 10 at the end of the year. But the risk equivalent would only have been 100. So I could have charged you 100 collectively at the beginning and nothing would have been paid back. So this idea of getting back unused funds is maybe not such a good idea because you pay fees and all different types of commissions on the 110 you put into the pool, and at the end you don't get back 10, but 10 minus commissions, fees, etc. So you get back maybe 5. if you would not have paid 110 but only 100, you could have invested the 10 in another account and probably earned a higher return. So that explains why maybe after some competition this Takaful plateaued. So again, I don't think that this is really such a strong argument in favor of Islamic finance. Now let's go to product qualities. One thing is we had cases where, particularly in the recent financial crisis, we had a problem with the ability of borrowers, of people who have purchased, for example, a house from a bank to service their debt. They were obliged to pay a certain amount each month probably. And because of the crisis, sometimes people were unable to serve their debt. But sometimes it might also have been a good idea to pay early, because all of a sudden you have the money and you could settle your debt before maturity. But then it was realized that some banks really were very hard-nosed. They said, yes, you can settle your debt early, however, it was a sales contract, so you owe me the sales price. That means the sales price, it was calculated for long-term financing, let's say for 20 years. For 20 years you are using the funds of the bank, and over 20 years you would have paid back. And as I said, usually the benchmark is LIBOR. You calculate roughly the equivalent to conventional interest, accumulated over 20 years, and that's how you derive your sales price for such an object. Now, contractually, however, it's a sales contract. You owe this amount whenever it is due. So if you do an early payment, or if you can't pay your regular installments, still the bank can claim this price from you. And some banks in the UAE did so, and it was only the intervention of the central bank that stopped this practice, which was definitely more unjust and critical than the way conventional banks treated their clients. Because if you settle conventional loan early, or you cannot continue with this loan, you may pay a penalty rate of interest, but you definitely will not pay for 20 years if you use the loan only for 2 years. So there is a lot of rigidity in some of the contracts, in the way they have been practiced did not create a very favorable climate, and it was taken very well note of these practices. On the other hand, the idea that everything is based on real assets, which by the way have these downsides, also seems to be not the full story, because as we can see, banks are financial intermediaries, and as financial intermediaries they mainly deal with financial instruments. So the point is that it's much better also for the bank not to provide commodities, not to provide the real assets, because if you're selling them, there are additional risk layers, there are additional obligations. It would be much better to provide financing, and therefore the concept of tawarruk, of commodity murabaha, popped up and is widely used not only for liquidity management, but in some parts of the world also for consumer financing. You just sell and resell the objects, and the final result is that the client has liquidity today and has to pay back more liquidity in the future. The asset that is bought and sold becomes more or less irrelevant. It could be anything, but to make it smooth running, usually the asset that is bought and sold is platinum in the London Metal Exchange, which is an electronic exchange where you can organize these types of electronic transactions within a very short period of time and with actually no market risk. So also the product features are not always as it was initially thought of and as it was initially anticipated by those who were very keen on Islamic banking once they realized that this type of business is not the rare exception, but sometimes quite common. It was a disillusionment. Better risk return packages, I have some doubts whether you can get it as long as the Islamic financial engineering is basically reverse engineering. You have a conventional product. Islamic banks very often originate from conventional banking. They are subsidiaries or they are run by conventional bank managers, structuring departments. So you have financial instruments, you know why and how to use them and why they are beneficial from the banker's point of view. So you try to replicate them in a Sharia compliant manner, but that is not really an innovation. It's the same thing in a Sharia compliant wrapper. And as long as this reverse engineering is dominant, you probably will not get better risk return packages for the real economy. So more risk sharing with entrepreneurial partners, it hardly takes place. And if it would take place, this is an argument you can hear more and more often from Malaysian bankers, they might even breach a fiduciary duty against their investment account holders. Investment account holders are risk averse. If they are risk averse, you must not put their money at risk by financing entrepreneurs with entrepreneurial risks, serious entrepreneurial risks, but you better go for risk-free commodity financing, for example. So therefore, the practice of not going into risky entrepreneurial ventures is justified by the expectations of the depositors. But this again is something where we do not come up with completely new types of instruments which we could recommend on a broad scale as a solution for our problems of entrepreneurial finance in the conventional world. So back to basics, this is the main message in Islamic finance, and many people think that Islamic finance shows us the way how we can get back to basics. Well, some banks do, some others are working on derivatives, structured products, Islamic or Sharia compliant repos, so advanced products which many people think were responsible for the financial crisis. So if you can seemingly replicate this with the consent of Sharia scholars, I'm not so sure whether we will really go back to basics. No hope? Yes, there is some hope. There is an ethical dimension which is claimed for Islamic finance. And I think the best way to illustrate what is happening here and what should change in the future to make Islamic finance more appealing to non-Muslims can be illustrated by the process of stock screening and the composition of Sharia-compliant portfolios of securities. Usually we start with the universe of all investable publicly listed equities if we want to create a portfolio of Islamic stocks. I could also say the universe of all entrepreneurial activities that we can finance, so it is not restricted to equities, but here we have an elaborate methodology, so therefore I just refer to this as an example. Now, if you want to come up with a Sharia-compliant portfolio, there is first a filter, a screen, which sometimes is called industry screen. That means you have to check whether one of the prohibited items is the main object of this company, and then you cannot invest in it. So if there are haram activities, pork, alcohol, etc., as I mentioned, you cannot invest in these shares, in these stocks. So that is, for some people, the ethics in Islamic finance, which gives you, after this filtering, the universe of companies not involved in haram activities and products, and then which of these do you choose? Well, actually, you still have to narrow down the universe by a second filter, a second screen, so-called financial screen, because you will hardly find any company that does not carry debt and that is not somehow dealing with interest. So either paying interest for debt or receiving interest for money placed with banks. So therefore, there are financial ratios that are screened, and if the interest elements, roughly speaking, are not more than 1/3 of the balance sheet or the market capitalization of this company, then you can invest in these companies, which is a pragmatic setting, 1/3. It's not in the Quran, it's not in the Hadith, not even the bank is in the Quran or in the Hadith, so this is a very new invention. It could have been 37.5 or 26 point anything. So it's not the majority. The majority would be 50% plus something. So it is just a pragmatic figure which gave you quite a reasonable investment universe, just to give you an idea how, let's say, little is excluded if you take the Kuala Lumpur Stock Exchange. You have a lot of Chinese businesses. Most of the businesses actually are Chinese, not even Muslim businesses. And we have an official screening by a body of the Securities Commission. 85% of the stocks in the Malaysian, in the Kuala Lumpur Stock Exchange are considered to be Sharia compliant. 85%. Only 15% don't pass the first or the second screen, so it's not very restrictive. So then, what do? You have your Sharia compliant equities, and usually that is the part of commerce where you invest in something which is most profitable. Now a slightly complicated thing here. Let me try to explain. In Islamic finance, starting from here, we have this first filter, the negative list. So what is prohibited per se? You cannot invest it even if the financial ratios are met. Pornography, weapons, tobacco, pork, gambling, etc. And also institutions dealing with riba, so you cannot buy shares of conventional banks. Here you obviously ask for the substance of the business. Some people, however, criticize Islamic banks because they say, well, the substance of what you see in Tabarruk, commodity murabah, for example, is the same, you only see different forms. So in that sense, it's not so clear whether everything that is included here is based on substance. Sometimes it's only based on form. But what is important is you have an exclusion list then. Business violating financial ratios, that is the second level filter which I mentioned. Liquidity, interest and debt ratio smaller than 33% of market capitalization. And that creates here the green one, the investment universe for Islamic financial institutions. And what is the final decision? The final decision is usually the rate of return that you can get from such a portfolio. It is a commercial decision. Now, if you want to position Islamic finance as ethical finance, you should take a look at the practice of ethical and socially responsible investing in the conventional sector. And there you have similar structures, but then also one very big difference. If we look at ethical finance and SRI, socially responsible investing, we have the same negative risk, the same per se prohibitions, except maybe pork and alcohol. But even alcohol is for some companies who are creating ethical funds a no-go. And then we have some funds where also on the second level we simply have an exclusion list. Then the businesses are excluded, however, not because of their financial ratio, but because there are some ethical or socially responsibility or ecological goals that these funds would try to promote, or things that they would like to try to prevent. So for example, these exclusion lists are very often used against companies who are accused of child labor, of violation of labor rights. There are some company boycotts where labor relations are particularly bad, or during the apartheid period, this was also a criterion that one could not invest in South African stocks, for example. So here, these clearly are not financial ratios. There are some ethical, social responsibility ideas behind it, why you should not invest in this. But structurally, it is very much the same. It is the second exclusion list. And then out of this narrowed down universe, you probably choose those stocks that give you the best return, or risk-return profile. I would say here in the second screen, however, it is more substance than form. It's not, the form is just that the financial ratios are met. But here you are looking, what are these companies doing? What is going on inside these companies? For example, labor relations, child labor, human rights violations, etc. So there is another kind of substance that people are looking for. And finally, we have another approach in SRI, or ethical finance, where clearly it is not only that you exclude certain things or certain companies where you do not invest in, but you actively pick and choose where you are going. For example, you promote in particular investments in community development or very popular renewable energy or other ecological activities, provided that they give a minimum return. So it is not maximizing the return, the decisive criterion. It is looking for the content, looking for the substance. How much do these companies contribute to some socially responsible or ethical ideas and ideals that people are following? Now, this was a very rough outline. If you take a closer look at what is going on in this industry, you will realize that meanwhile it is very well structured. First of all, we have clear definitions of so-called responsible investing and the so-called ESG criteria. ESG stands for environment, social, and governance. Governance, for example, are labor relations. Now, if you have a company that has poor labor relations, but otherwise is producing something which you feel is useful, sometimes funds are investing in these companies to become shareholder and then follow a so-called engagement strategy, namely raise their voices in annual, general assemblies, entering into a debate, into a discussion with the management in order to change the behavior of these companies. So this is an engagement with governance issues in companies which otherwise are producing something very useful or considered to be useful. Environment, here you have a long list of practices which are predominant nowadays. For example, we have funds mainly investing in companies that are related to climate change and renewable energy activities. We have other environmental and ecological funds. We have these carbon dioxide funds, so reducing carbon dioxide emissions is the target here. Sustainable forestry, in particular the rainforests in many parts of the world, by the way, including Malaysia, although there is not much left. So these are activities that you would like to promote, and here also social activities from microfinance over social entrepreneurship, social impact in an individual area, for example, or multiple impact areas, or venture philanthropy, a very new development that somehow could be added here is crowdfunding. People put their ideas on the web, and if you think it is a good idea, you could, with a philanthropic background, invest in these people because you believe in their concepts and their plans. You could also, by the way, do it for purely commercial reasons, so that is somewhere in between. So what I'm telling you here is that we have an elaborate methodology in socially responsible investment in the conventional world, and it is applied. It is applied. Here are the methods. I don't have the time to go through all these things, but they have, meanwhile, clear definitions. And what is very important, we have also index providers. We have companies doing the screening for you. If you want to invest in a company with good labor relations, protecting the rainforests, or having good relations with indigenous people, not exploiting the indigenous knowledge as a pharmaceutical company, for example, you do not have to go there by yourself. You can use service providers, by the way, the same service providers that are also active in screening Sharia-compliant funds, which are the Dow Joneses and the Standard & Poor's and the Reuters who are providing this information. It is no longer a small community of esoteric people. It has become mainstream. It has become mainstream in Europe. So if that is mainstream and if that is the standard, here it's a slightly different presentation of the previous slide. Here we have some microfinance funds, social entrepreneurship, etc. So these are the ESG, ecological, social, and governance categories. And in some terminology here, which I have taken from a KPMG publication, you will find something like ethical funds, and Sharia-compliant funds are listed here. However, I have hardly seen any ethical funds following the methodologies which are used by conventional ethical funds. That's the point. And faith-based funds, they are using this. That is, for example, a Christian fund. Many of these things have a Christian background. Many people have engaged. They shun away from so-called sin stocks, and later on it became more active, being involved in social, ecological, and governance issues. Now, there are strategies and there are statistics, and I give you just a rough idea about the figures here for Europe. Without going into the exact definition of these strategies, it is a very broad concept. There are some double counting. Some funds are following more than one strategy, but KPMG and Eurosif, which is a kind of a lobbying association, have tried to come up with net figures, looking for double counting and then ending up with a total volume of these funds in Europe of 6,800 billion euro, which means roughly 8 trillion US dollars. Just for comparison, here, the global Islamic finance industry is estimated 1.6 trillion, and that includes some of the richest countries in the world. This is troubled Europe, 8 trillion in socially responsible investment, and obviously rapidly growing. The growth rates of some of these strategies are more impressive than the growth rates of Islamic finance. So this might be a market, clearly. And from what you can see on the front page of annual reports, all these claims are made. But what is delivered on the ground? Here, for example, what you can see now in the United States on the level of the retail consumer, there are meanwhile institutions which are screening the various socially responsible funds, and you as a retail client can check, for example, if you have a preference for climate clean technologies, climate conservation technologies. This is a very long list. The sources give me a very long list. Each and every fund that is available is screened, and you can here see very simple a P or a minus, plus or minus, whether this fund takes care of it or not. So this is a very rough orientation that you can get. You can get it much more sophisticated if you like. There are media reporting on this and so on. So this industry really has come of age. It is transparent. It is screened and observed by a critical press, and it has the support of people who are really fed up with speculative derivative trading and putting their money at risk. They want not only back to basics, not only prudent old-style banking, they want to know where their money is going. They want to see that the deposits are really making an impact, a social impact, an environmental impact, an ecological impact, and they want a minimum return. It's not for free. This is not philanthropy. It is business. So I think Islamic finance, with its underlying philosophy, could clearly fit into this segment. However, it must take a much closer look at the standards which have already been set by conventional financial institutions. Otherwise, the reverse may happen, and the Muslim retail client may all of a sudden realize that maybe, because what is the difference in substance between tabarruk and investment accounts, which are guaranteed more or less factually an interest? Why is that riba free except for the form? Maybe some people start thinking that the interpretation of riba should get a second thought. It has already started this debate. And if so, this looks to be much more challenging and much more important, that people put their money where their heart is, if you like, put their money where they can see a change, and pure Sharia formalism will not capture this. So that is more or less my point. Of course, I'm ready to take your critique, but as I see it, The potentials are there. It is a huge market. It's a growing market. However, this market does not fall into the basket of Islamic finance by itself. It may be that there is a trickle down from Islamic finance into this market unless this challenge is taken up. Thank you very much. It was 45 minutes, so I think I'm more or less better time.
Thank you.
Nice to hear from questions.
Thank you. I wouldn't simply start asking my own questions, but I would try to highlight just a couple of points before and necessarily have time and number allow us for as many debates as you like. I think there is a reference was made very clearly by Professor Greenhouse to what I call a bit sharper than he does, the question of credibility of Islamic finance. Many of our analysts, people making theories, developing products, and being concerned with the form more than the substance, and with adaptation more than creative product development. And as such, I think from what we have seen in this brief presentation, we are facing a real problem. On the other hand, we could see there is a big potential. I mean, the picture is not black or gloomy. There is a big potential. But the point is how we can capture this potential. And like any kind of opportunity, it might have pros or it might have cons. We'll stop at that and the floor is open. Okay. Yeah.
Thank you, Mr. Volker, for an excellent presentation. My comment is not so much a criticism, but it's a general comment about your presentation. At the end, you presented a positive picture for Islamic finance to attract non-Muslim customers, but not so much for Islamic banks to attract non-Muslim customers. And I was hoping to hear more about that as well. In that regard, I might have a few suggestions on how Islamic banks can probably attract non-Muslim customers. It's a well-known fact that non-Muslim bankers and lawyers and other practitioners were heavily engaged in the development of Islamic banking. And that maybe could be highlighted and given more attention to by Islamic banks in their marketing campaigns, perhaps. That's one suggestion that I have. Another suggestion is that Islamic banks can probably also lead the way on this new trend of triple bottom line reporting in their annual reports, where they report their social as well as environmental impact. And if a shift in mindset happens within Islamic banks in terms of seeing corporate social reporting, corporate social responsibility reporting as an investment rather than a cost, that might be another way. So if you have any more suggestions and comments on that front and how Islamic banks can attract non-Muslim customers, then that would be welcome. Thank you.
Well, I agree that, for example, this reporting of the activities could be very beneficial, provided that you have been active in these fields. And if corporate social responsibility is just for the bank and not beyond, it wouldn't change much. And if it is just by reporting zakat, the use of zakat funds, again, it's not really what I have in mind. Islamic banks are very important to launch funds. I mean, what we have now are investment accounts. Okay, have investment accounts which actually are exposed to risk, at least conceptually, but it is hardly clear to the investment account holders, and they don't get a choice, and they don't get a prospectus, etc. So what would be a first interesting step is, for example, to create explicit funds where you can put your money into a business on the same contractual basis as in an investment account. However, and it is also pooled, so there are risk mitigation techniques, however, you are explicit in what kind of activities you are investing. And most probably these funds cannot pop out of nowhere, so banks, I think, play a very important role in profiling these funds. The other thing is that maybe banks could also set aside a certain small amount of financing, means of financing for real entrepreneurial new ventures. I mean, the whole debate in the Middle East, you're probably aware of this idea of crowd financing there. It's very attractive, but where does it come from? If you start from scratch, it's very difficult. But Islamic banks here have experiences with trade-related modes of finance, with asset-based financing, and that's what entrepreneurs need. And in that,
if you don't mind not closing the picture, because yes.
Yeah. And in that regard, I think there are a lot of possibilities how Islamic banks should change in small steps their business profile by creating, as you say, more credibility. I don't argue that everybody has to go for social responsible investment tomorrow. We create fantastic bubbles. Clearly not. It's a gradual process, but somehow one should start with this and show that one is, let's say, up to the standards, to the global standards that are employed. So I'm not so skeptical that Islamic banks could not contribute, but specific, let's say, suggestions for banks beyond what I've been just mentioning, I don't have for the time being. That would be a consultancy job. We can join in that regard.
First of all, I would like to thank Professor Al-Shawi and the Faculty of Islamic Studies for always choosing and introducing interesting guests with interesting topics from time to time, sometimes controversial maybe.
Sure.
And thanks Professor in-house for his interesting lecture. What I understood is rather than expanding, first of all, I'm chairman of Islamic Bank in Doha. So we face some challenges of how to be credible and not to be seen like having cosmetics over our products rather than real substance. And when I saw the ad about the lecture and how Islamic banks can appeal to non-Islamic clients, I thought this is interesting, because sometimes it's not easy to appeal to Muslims, let alone non-Muslims. So, but what I understood from your lecture is rather than expanding Islamic finance or Islamic banking, it's becoming part of more ethical banking industry. If possible, just to go back to the three-color, more, please, with the numbers, with 1.8 trillion, after.
It was at the end.
Towards the end.
Last back one.
Yes.
Yes.
So we are talking here about global Islamic finance, which is 1.6, and the environment, government, and then you have the global financial assets, which is total of 180. So the chance for the orange color is to expand into the green color, mainly in Europe, because it seems from your discussion, this kind of awareness is mainly in Europe.
It's also in the US, but the figures are a little bit older, so maybe now we have 5 trillion or something in the US. It's growing in both parts of the world.
So the question is, for Islamic banks like us, there is a committee to evaluate. We are an investment bank, but getting into it. There is a committee which consists of a Sharia guy, you say it's Sharia Bible, a legal guy which say legally the interests of the bank are protected, a financial guy to say it's Bible. But what you are saying is to introduce another layer or layers of all the other issues you mentioned. So do you think it's more complicated? It's interesting, but I'm not sure how easy it is to do.
Well, it makes it more complicated. However, this figure and the growth over the last years is mainly due to institutional investors entering in this field. So that is very interesting also for an investment bank. On the one hand, we have this retail segment, but the big growth here are pension funds, for example. Norwegian pension fund and Scandinavian pension funds, and also I think also in the UK, they became increasingly critical about the conventional interest, let's say, the obligation to invest in more or less interest-bearing bonds, which turned out to be neither very profitable nor very attractive. So they lobbied for widening the scope of the investment universe with this direction, because they think that in the long run, sustainability pays off in the long run, and these are very long-term investments that they are doing. So there are empirical studies whether good corporate governance pays or not, whether it is rewarded by lower capital costs or not, whether in the long run the rate of return may be higher in general in responsible investments, etc. At least it cannot be said that systematically it is lower. So there are some big tickets now which are financed by these institutions, and they actually involve actively, so to say, an ethical office or responsibility, or the terminology has changed a little bit. It started as ethical funding, then it became socially responsible investment. Now it's often called sustainable and responsible investment. The sustainability is more the ecological component also. So preparing, for example, in the long run for a less carbon dioxide economy, preparing for renewable energy sources. What happens if the United States continue with their oil policy? What happens in the oil markets? How do we diversify, etc.? Always with the background of those people whose money they are investing, the pensions. So yeah, it becomes more complicated, but it can substantially grow, and these institutions are not doing all the investment decisions by themselves. They are using the services of investment banks, for example, or fund managers, etc., who have this expertise, and they have been driving also the infrastructure. The development of screening methods, the development of indices, and so on. It's also a growing body of literature on this. It is pretty well documented, and most is available on the internet. And I think to take a second look at this, it makes sense also maybe to attract more Muslim clients. I mean, they are expecting responsible and sustainable investment. They are not expecting the replication of what we already had. And so even there, and I mean, to enter into this 180, straight on it won't work. That were my critical comments at the beginning. But there is a way to get in it. It is through these green figures, which will also have a substantial impact on the Muslim markets. I think in most countries, the market share of Islamic finance is less than 10%. Means 90% of the Muslims on the average are not dealing with Islamic banks, they are still dealing with conventional banks, although in these countries Islamic banks do exist since 20 years and more. So this is also something that seemingly there, at least on the retail level, there are reservations, and much of the growth is through political interventions and political activities. Many big infrastructure tickets are now financed in a Sharia-compliant manner, but that was a political decision. That was not the market that went in this direction. And here I'm just indicating that the market may have something to offer once more. are able to tap into it, and that requires indeed an additional expertise that you normally do not have in banks. But you can get it. It is available.
Are you saying it's mainly for government or big institutions
and wholesale only? Because
No.
the question is the retail level.
It started on the retail level.
But how can, sorry for the interruption, we have been approached for a license in London, for example, for the Muslim communities. I don't know how many, maybe it's 4 or 5. You see European banks coming to the region, for example, and offering Islamic products. The last one, just this one, Coutts. Coutts is the Queen's bank introducing Sharia compliant products. But if you want to go back there as an Islamic bank, without using the terminology that might frighten, and open branches in Munich or Berlin or Paris or London, still, I don't think it's easy to appeal to non-Muslims. It needs a crusade by the Federation of Islamic Banks. I don't know whether there is a federation of responsible banks. There are.
Let me put it this way. I could give you one example from the takaful industry where they started with conventional insurance, unit-linked insurance products, and then they produced as white label also Sharia-compliant products. And meanwhile, they realized that their asset selection mechanism is such that they can use the investment universe also to create attractive products for the non-Muslims. So they could think about a campaign saying that we are offering this product with these qualities, and by the way, if it is relevant for you, it's also Sharia compliant. So that is maybe the way to put it. And here this movement started on the retail level, clearly. But the growth over the last years, that's what I'm saying, came from pension funds, which are sometimes driven by retail individuals who are pushing their pension funds to move in a direction in which they also want to put their individuals, their personal money.
Thank you very much. First of all, your presentation. My question is, there is any dispute resolution center regarding any financial disputes? For example, if I am a bank and I have a contract with a non-Muslim company and we are in dispute, where we should go, how to be resolved. And if we are in different location, I am in Doha, and I have a contract with any other companies overseas, where to go to which court? And is there any purely Islamic dispute resolution or court?
Well, for the time being, I think there is no Islamic court. Usually, if you have cross-border transactions, you can read which legal system is applied in the case of a dispute. In most cases, it's British law, so it will go for a British court. Meanwhile, they are knowledgeable about Islamic terms, Islamic contracts, etc. So, but it is still the British law that is applied. It's not Sharia law, and therefore, because some decisions of British judges were not what the expectation was, what was expected if you apply Sharia law, the general advice is add a few 20, 30, 50 pages to your documents and be explicit what you mean by Sharia. So the real art now is to formulate Sharia-compliant contracts for secular courts, for British courts in particular. There is only one country, and maybe it is easier there, where I'm aware of a special dispute resolution institution and also a kind of a mandatory advice that civil court judges have to take when it comes to Sharia financing issues, and that is Malaysia. The decision, the court decision, is still in the secular system, But when a secular judge, so to speak, it could be a Chinese judge, for example, it is a multi-ethnical country, or an Indian judge who has no idea about Sharia, has to decide such a case, he has to ask for the Sharia meaning or for the Sharia specificities of this contract. There is a specialized Sharia body giving advice, but then he still is free to make his decision, but now knowledgeable decision, based on the national law in Malaysia, and that is not the Sharia law. It has some Sharia elements, but basically it is an inherited secular law. And in order to be more on the safe side, arbitration becomes more and more popular. In Malaysia it is not so difficult because you have only one dominant school of law, Sharia law, in that country. You don't have, and you have the highest authority for Sharia questions in finance. The central bank and the Securities Commission have a Sharia board on a national level. They have the final say, and the Sharia committees of the individual banks have to follow these guidances. So there you can have a better structure and clear dispute resolution mechanisms on different levels, courts, arbitration, etc. But in other countries where you have different Sharia opinions, different madhabs, for example, it becomes more difficult to put something on the top level. And I'm not aware of any other country that has such a clear structured thing as Malaysia.
I think there's a lot of countries that are using arbitration, mediation, but our clients are looking for the pure Sharia, Islamic law principle.
Even if you take Saudi Arabia, is it pure Sharia? I'm not so sure, because in many cases the corporate law, the company's law is affected, and that is an inherited law. It has not changed. It is, I don't know, French or British or whatever law, from where it was taken, adapted, but it is not a traditional Sharia law. So even there you have a mixture of different legal systems.
Thank you.
Thank you, Professor. I think just to add to this point, in Malaysia they introduced the Sharia bench, basically in the court system where the disputes and any cases that are going to trial, they're presented at the Sharia court or the Sharia Mu'amalat bench to resolve. Correct me if I'm wrong. Is that my understanding correct?
No, it's not really a Sharia bench. They had this system in Pakistan in the past. It's still the regular court system, but it's a kind of mandatory advice that the judge has to take from such an institution which is sidelined to the regular legal system.
Okay. So, moving on to my question, actually, you mentioned that there's potential of 7 to 8 trillion in terms of the market, but is this market currently underserved in Europe and in the US, or, I mean, will the Islamic banks that actually go there already find very fierce competition for this market?
Because of course you will find tremendous competition in these markets. However, the point is that people are not very much satisfied with the 180. So there is a growing trend, and this 8 will grow. So you are facing competition, but in a strongly growing overall market. And in particular, because institutional investors now take a second thought on their investment strategies, and they are now putting more emphasis on these SRI criteria. I think there is still room for banks, for financial institutions with some expertise and some credibility to enter into this market.
Thank you for the lecture. It was very nice to be reminded about the importance of coherence within the scope of Islamic finance. I will start with the remark, which is kind of criticism, maybe because of the time of the lecture, we did not really tackle the issue of regulatory, the role of the regulators in the field of structuring Islamic products. In the sense that at the end of the day, Islamic banks, they remain commercial entities. So you may say they are greedy in nature. And this is the role of regulators to make sure that the system as a whole will ensure public interest and Sharia compliance within an Islamic state or Muslim country. And in this case, particularly speaking with regard to banking, cosmetic arrangement can be seen within the banks in structuring teams, but also within central banks. I mean, when you look at the regulatory arrangements that are being implemented within Muslim countries, they are almost cut and paste what we can see from conventional or Western institutions, especially after 2000, September 11, and all this regulatory requirement that came in. So I agree with the conclusion, but to make the picture comprehensive, I think it's very important to mention that point. So coming to my second point in the form of a question, is it for you that the future of Islamic finance is within fund growth? And if so, do you think that it would be enough to make Islamic finance intermediation inclusive? Because when we are talking about funds, usually we are talking about structured products. While some people don't have access to such kind of products, and they just need like bank account and very limited developed kind of deposits.
Okay, the role of regulators, I think the general consensus is clear. It's Basel III, and we apply basically the capital adequacy ratio, leverage ratios, liquidity things of Basel III to Islamic banks and conventional banks. Actually, I think next week there will be a hearing of IFSB, Islamic Financial Services Board, in Qatar about the revised capital adequacy standards in the light of Basel III. They have integrated also some other previous standards. It's a more comprehensive thing now. But the philosophy of IFSB is clearly not to create a completely separate system, but to integrate Islamic finance into the overall financial system of a country, taking into account the specificities of Islamic finance, taking a closer look at the risk characteristics, for example, of Islamic contracts, and then come up with a specific methodology for the risk weights of the assets on which you apply more or less the same capital adequacy ratio. Percentage-wise, it's the same for Islamic and conventional banks. However, the way it is calculated takes into consideration the specificities of Islamic finance. So, what the Islamic Financial Services Board is proposing is a, let's say, minimum consensus to which more or less all regulators can subscribe, and individual regulators follow. Some of them are following IFSB recommendations, others don't. The third group has completely homemade kinds of regulation. So that's the situation. I could talk about regulatory framework for product development on a global level with IFSB standards in mind, because they are claiming that they could be applied everywhere, and integrate Islamic finance into the conventional, the overall financial system, or we have to do it country by country. And I'm not an expert on the Qatari regulations, so I better keep.
But even if we take IFSB requirements, I mean, if I were to be very, hardly criticizing the initiative, I would say that this is a recognition of a failure. Because when we start saying we have profit sharing accounts, profit loss sharing accounts, and we implement the very same methodology, with cosmetic amendments, because at the end of the day we don't recognize the nature of those deposits as being investment. and so it is a recognition that this is kind of an investment, but not totally one. So if we would like to implement, I mean, Islamic finance has been developed by in the theory by Amma Shapra and all the Islamic economists, we recognize that there is a gap and between this kind of the discrepancy between the two. So I'm not criticizing the initiative of the IFSB by itself, but just like within this context, it is for Islamic banks very difficult to be able to implement true profit-sharing solutions, whereby even institutions that are supposed to be to make the bridge between conventional finance and Islamic one do recognize these discrepancies.
Well, one brief comment and maybe one footnote. The brief comment is that if you take really close look at the IFSB recommendations, they are trying to underline that investment accounts are risk-sharing accounts. However, they cannot ignore the fact that there are profit equalization reserves, investment risk reserves, etc. But what they insist, which is not implemented in all countries, that the banks should be transparent, that they should disclose whether they have paid out money from reserves or from the earned returns in that period to get a better picture of the risk characteristic and the performance of the money that is invested by the bank for the clients. The practice is not according to the IFSB standards in many cases. That's part of the problem. The footnote is, I think there is one historical misnomer, and that creates a lot of problems. The misnomer is that Islamic banks were called Islamic banks by Chapra and others, or Siddiqui. The initial idea that came up in the 1940s to create a new financial system for an economy that should be completely different from what was known then in former British India, the idea of Pakistan. That was neither British colonial capitalism nor communist socialism, but an Islamic system in between. And for finance, they insisted on this, what later became known as the two-tier Mudaraba system, which means more or less financing only on equity, with equity-like instruments. And the misnomer was that Siddiqui called this a bank, which isn't a bank. It is a fund-based financial intermediation system, maybe. It is clearly not a bank in the conventional sense. And then, from a totally different angle, Islamic banking came into being, namely Dubai Islamic Bank, which was a financial institution initiated and used by a merchant, a trader, a trading company in Dubai, having used conventional financial instruments over decades, and they wanted to have exactly the same financial services, not a different system, exactly the same system, but Sharia compliant. So that was banking, and that was what was the practice. And that has nothing to do with the theory where also the institution was called bank. And that's my footnote. I mean, therefore, we have this misnomer and these misconceptions and a lot of tensions, and unjustified, by the way, because there are different logics. Unfortunately, they have the same name. Okay, so now I forgot your second question.
No, first was just a comment.
Yes. Is there a movement in this direction by institutions or individuals like yourself that one can work with?
What do you mean by movement?
It's very confusing or tricky.
Yeah.
Very, yes. Like, it seems that you have a good background and experience with the Malaysian Islamic banking experience, you would say. And here in the Gulf, we think there are some similarities and differences. But what I'm trying to say, whether there are certain institutions or professors like yourself who are promoting this possible bridge, because myself and the institution I represent would be interested in exploring, maybe holding certain conferences, bigger type conferences, where even sovereign funds, pension funds, this is maybe a personal note.
good thing is that I retired from university service, so I can say whatever I like. The worst thing that can happen is that I'm not invited again. We have one institution in Malaysia.
I can invite you as a good friend.
There is an institution in Malaysia which I'm a member of their governing council since the inception, and now they made me adjunct professor for following through with some PhD projects. It's called INSEAD, International Center for Education in Islamic Finance. They have been set up by the Central Bank of Malaysia. They part, so to say, of the Malaysian Islamic financial system. However, they also have quite a number of independent thinkers and colleagues loosely attached to that institution, like myself. I'm not teaching there regularly, but they have a resource base, they have a kind of a think tank, and they are closely cooperating because of the virtual proximity with the Islamic Financial Services Board, which is now in the process of revising many standards covering more or less all of Islamic finance in view of the practice of Islamic banks, and also in let's say, knowing the weaknesses and the public criticism that is going on in many parts of the world. So I can give you my business card, which, by the way, has the address of INSEAD on it. So I'm pretty sure that they would be very much delighted to get in touch with institutions here in the Gulf. In particular, now it's going an exciting time after the ruler of Dubai has declared that Dubai will become a hub of Islamic finance. Not so sure whether it will happen, but anyway, it is an announcement. So we recently had a conference of the American University in Sharjah. They are also creating a program in this regard. QFIS here in Qatar itself is a focal point, although they don't have a banking academy yet. But INSEAD is a banking and central bank driven institution specializing in finance. However, also looking a little bit into economics and macro. So that was the advertisement.
Okay, I'm going to charge you for that later. Well, again, that's just, I think we need to emphasize a few points. I think it is the responsibility of Islamic financial institutions. Again, I'm saying between brackets because I'm not happy about the Islamic financial institutions. I think we are going to make the departure point once we move from Sharia compliant to Sharia based programs. Because all the way through we have been trying to imitate, and imitators never innovate. I'm not saying that we are putting rubber stamps on non-Islamic products, but we are trying to adapt, make it compliant. This reverse engineering, if I use that terminology, of Volcker, yes, it's not going to work in the long run. And it's about almost reaching its limits. And unless we try to be innovative and develop a model that would reflect the Sharia-based concepts, whether we call it eventually a bank or finance house or whatever it is, that will. And this is one of the weaknesses, even in negotiating with international regulatory boards, because basically we can simply claim that our investment funds are quasi-equity and second-tier finance. But we know and they know this is not true. So they propose this, it's simply rejected. Because if we go to proper transparency, we know it is not. And they know it. So it's just a point that we can raise. The problem is that there are some financial institutions that started years ago at the very beginning with direct investment funds. So you have an earmarked investment, and it is true investment, and where the depositor, if we may call it, or investor, and it should be called, knows exactly the field of investment, the type of activity. It's general, it's not specific company, or shareholder. But say this is an investment window for contractors, or for contracting, for pharmaceutical products. And people would go and deposit money there and they accept taking risk. And so this could have developed. Unfortunately, because of the major desire to look like non-Islamic banks, that faded away. The case of applying Sharia-based microfinance, the good example I know of a German philanthropic activity in North Africa. They are using Islamic-based microfinance. But most of our activities from Muslim countries to provide microfinance or small finance are simply interest. Call it whatever you like. But it's simply a Grameen Bank model, and it's interest based but not the rules system or Shia. And as I said, the only model I know of is the German model of charitable organization in Germany that's working in North Africa and produces, and this is documented, published, and they found that the model works for them. I'm quite sure that all the others went against us. So we need, I think, to really welcome the initiative that might take the lead. If we are working, we are working with the Central Bank of Qatar here, which we have a wonderful collaboration, trying slowly but hopefully surely to develop something in that area. We are more or less close to substation, even Islamic windows and all these issues. But it will take time. I think it's the role of financial institution that is trying to be Islamic, to be the lead. I'm not pessimistic, I'm optimistic. My latest encounter with social responsibility based thing was with the Vatican Bank. Well, the Bank of the Vatican and the people, it was a wonderful evening. We spent hours and hours debating and fighting and so on. And again, we have an opportunity. To the point that we went out by, it's a joke, I'm not going to convert us, stop it. Because we have a language that if we apply, yes, we can penetrate the market. Competition is healthy. And if we stick to what we should stick to, yes, we can compete. And we can really grab quite a good amount of this growth. And it is fascinating. It was first time for me to be exposed to these figures and the type of cooperative banks and so on, and these social responsibility banks more than a trip to the Vatican on a larger scale. And yes, I could see the opportunity, and we can, if we want. Thank you again for the house, and thank you for being with us in this evening, and I hope that we will be able, inshallah, to raise more critical questions in the Faculty of Islamic Studies, and you are kindly invited to share about it with us. Thank you.